trading is actually less risky when you day trade, when you're not holding overnight. And the other thing about day trading is if you're holding overnight, you're just going to get fewer at bats.
We hear all the time people are looking for that magic strategy. First thing I want to just reiterate is the discipline in your first trade. I think that's fantastic. I don't know how many times I've seen it completely opposite. I saw a TikTok and it said you buy when this thing crosses this thing. So then I've come to Trade Ideas, I've built that scan, and boom, I start trading. Where, you know, people don't know if it's going to work or for how long or what percentage winners, what the risk reward is. Are you going to be comfortable with the mathematics of those outcomes? And that's why we built the paper trader, and that's why we built the back tester, is to allow a lot of these things to happen risk free.
Here's another little secret of mine. I have never completely given up on a trading system. Keep the strategy trading live. As soon as you stop doing that, it kind of goes off your radar. You kind of lose track of it. As quickly as you can, stop looking over other people's shoulder. Stop looking at other people's P&L. Take responsibility for your own trades. Take the responsibility for your own financial success in trading. The sooner you can do that, the sooner the success will come.
All right, everyone, welcome back to the channel. We have another interview in our Meet Trade Ideas series. So far, you've seen Steve, you've seen Andy. Now we're going to talk a little bit about behind the guts on how Trade Ideas works. We have our CTO here today who basically runs and makes sure everything that you guys do runs. So it'll be great to talk about kind of the technology a little bit behind it, but Dave is also a trader and he's been trading for a very long time, and a little bit of a different spin as opposed to Steve and Andy, which are kind of pure discretionary. Dave likes to do things a little bit more systematic, talk about backtest, talk about quant stuff. So if you're into that kind of world, I think that will be absolutely fantastic. So without further ado, hey Dave, how's it going?
Hey, Michael, thanks for having me on. This is awesome.
I think this is going to be great because we don't see a lot of you, Dave. We see a lot of, me and Jamie and Andy and all those guys all the time. But you have been trading for pretty much just as long as the rest of us, and I think longer than myself. And then, you're just kind of hammering away in there and making sure everything is staying running all the time, which is obviously appreciated. So let's just start off for the people who don't know you, just a little bit about yourself before Trade Ideas, right? How did you get involved in the world of trading and finance? And, what was your start in that area?
So, I'm a runner and a cyclist. I ran for UNC, so I always have had a competitive spirit, big time. So when I graduated from college, I started investing a little bit. My dad invested all as I was growing up, had a very, very conservative outlook. Um, so when I started investing, I was very, super conservative. And over time, my outlook, my strategies just became shorter and shorter. And I realized that um, trading is actually less risky for me when you day trade, when you're not holding overnight. Overnight's when all the news comes out, those are when the big gaps happen. So for me, at some point, I had a realization that, in fact, there was a specific trade that I can talk about it if you want to, but
Sure.
it sort of um, it really made me change the way I thought about things. So I, just like I said, my time frame just got shorter and shorter and shorter until I'm 100% day trading. At some point, I became more and more systematic. So now almost 100% of my trades are automated. I've got 15 plus trading strategies that I trade every day.
Okay.
And I'm a trader. I mean, I do a lot of the tech stuff, a lot of the stuff you see in Trade Ideas. I mean, I think all of the major stuff you see, I did. So I think of Trade Ideas as um, a way for traders to get an edge, create their own trading edge. That's what it's always been about for me. That's why I'm here. That's why I came here at the very beginning, because I could see that this was a way for traders to create their own edge, improve it over time, and get better and better. And for um, I think a lot of the traders that see this and use trade ideas can resonate with that because it's a powerful platform, and it a lot of it came out of exactly what I needed to trade well.
That's and I just wanna hit that on the head because I love that, and it's funny. Nobody that I'm interviewing has seen the other interviews, but it's hilarious how much of, that's a kind of thread that we're pulling on throughout is that you have other companies that they're like, okay, we're gonna build a product and we're gonna sell it and we're gonna make a bunch of money and that's our goal. But it's interesting to see, from you and then Steve and Andy, and I know when I get Dan on it will be the same thing, that it was like this is something that we all wanted to build. And if you see our internal Slack, it's, I always feel bad for Dave, it's all the traders trying to pull Dave in their direction. I would really like this functionality for my trading, and then I would really like this functionality. And as much turmoil as that can create from time to time, I think it's great to the spirit of trade idea, which shows that it's not just, we're not just cramming in features for the sake of cramming in features. Everything we're putting in is because there's somebody who is like, this is something that helps make me money, and this is something that gives me an edge on trading, and this is what I want to go through, and I love that. But I do want to go back and hit a little bit about your time frame, because I I agree with you in some respects that day trading is definitely, you expose yourself to a little bit less risk there. I don't day trade very much, just frankly because I'm not very good at it. But I think a lot of people would actually be really shocked by that statement. So let's hit on that a little bit more. What do you mean when you say day trading is actually less risky for you than
Yeah,
investing or holding overnight swing trading?
sure. So I'll go back and tell you about a specific trade where it really dawned on me that this is the case. This is back in the early 2000s. So I wasn't really trading, I was investing at that point. And I lived in North Carolina, still live here a long time, North Carolinian. Um, there was a local North Carolina company, I think it's still around, called RFMD, RF Micro Devices. And that was like the darling local company. It was doing, people were crushing it, buying their stock. And, that was the word on the street at that time, early 2000s, like you should buy RFMD. And some people in my life suggested I do that. So I did. And, um, I bought it before earnings, was holding it. And then earnings came out. And guess what? They crushed earnings, right? It was amazing. What happens the next day? The stock goes down. I'm like, oh my gosh. Okay. Like in that moment, here I was. I thought I was completely right.
Hmm.
Uh, the market just went completely against me. And for the market to react that way, in that moment, I thought, there's no way I will ever have an edge in predicting that. Um, so what I realized shortly after that is what I can get an edge in is trading the reaction to that news event, and avoiding the overnight gaps where at that point there wasn't a lot of pre-market or post-market trading, so you can't you couldn't get out at that time. So and the other thing about day trading is, I think a lot about at bats. How many at bats are you going to get? um, if you're holding overnight, you're gonna, or even longer, you're just gonna get fewer at bats. So at that time, I realized, I actually did trade a swing trading system shortly after that, and I just realized, it's gonna be it could be a year or more before I realize that this strategy is actually has an edge. Like it could take that long for me to get the feedback I needed to figure out if it's working well and how to improve it. And then I realized, okay, well, just I can find so many more opportunities in the day trading time frame. I can measure the results very quickly. I can iterate on it and learn every day rather than having to wait 30 days or longer to get the results of a trade. Like everything about it just resonated with me. And I just felt like I had a path to significant edge and multiple significant edges doing this.
See that it's interesting because I have a little bit of a similar story. It didn't push me to day trading, but it did push me to avoid news events. And it was when I was at the prop desk, we had a squawk box. So basically, a guy just sitting there reading the Dow Jones news as it happened. And I forget the name of the company, but the CFO was indicted for fraud. So I immediately pull up the company and I'm just punching in short as hard as I can. Go, well, this is a no brainer, right? This thing's going to drop like a stone, and then the stock just rips. And I don't know why. If it was like everyone knew that he was going to be indicted for fraud, and it was the kind of the opposite of sell the news event or something, and it just kind of blew out almost a month's worth of gain in this one trade. And I was like, okay, I no longer care about news. And that was the moment where I'm like, I'm a technician from now on, for a
Yeah,
lot of the same reasons. Is that you're right, it's a very old trading adage that the news doesn't matter, but the reaction to the news matters. So when you're talking about trading those reactions, I imagine you're talking a lot about like gap trading and things like that. Is that a lot of where your strategies revolve around? Is that opening
that's how
lines?
I started gap trading. That was my first real day trading strategy, and that worked. Like I realized that, like thinking back, like I had this plan to, you know, start day trading, and I knew, given my upbringing and my dad, like telling my dad I was going to start day trading, I knew that would be a very difficult conversation. So, given his conservative outlook, I just knew that okay, I had to have my ducks in a row, and I had to like convince him that this wasn't like the dumbest thing on earth, which I knew that's what he was going to think. So I was uber prepared by the time I'd made my first day trade, and I don't say this to brag, but I was profitable the first month, and that strategy worked well right from the time I started trading it. And I've thought a lot about that. Like, was I just lucky? Did I just luck into this, and that strategy just happened to work? And actually thought that for a long time. Maybe I was just lucky, but I realized like just my upbringing and my mindset, like I was just uber prepared by the time I even risked the first dollar day trading. So, um, I'm super disciplined too. Like no impulse trades. Like I don't do that. So um, that was that's how I got started. And the it's not it didn't work forever. So that was the other huge realization I had was, I guess, probably 3 or 4 years into trading that strategy. My mindset was, okay, I'm just going to scale this thing up, get it bigger and bigger. Just keep doing it. Like that's the name of the game. Just trade it as big as I can. And in the middle of one of those years, I was in a serious drawdown with this strategy. And it was sort of a come to Jesus moment. Like, wow, is this this is supposed to be working. This is who I am. This is the kind of trading I do.
Hmm.
And you're kind of staring into the abyss when you realize that you have to be adapting, reinventing yourself all the time. And in that moment I realized I have to come up with a system for constantly improving my strategy, and something like a way to come up with strategies way faster than I was doing up until that point. And this really made me realize that. And it was, I mean, Michael, like trading sometimes sucks. Like
Yeah, often,
sometimes
yeah.
you are really in a bind and not sure what to do. And feeling that way, like feeling like you're in a dead end, sucks really bad. But when I think back on my training career, those are the points where I've had the biggest breakthroughs, because you're kind of back up against the wall and you have to make it work. And those are the points where you try lots of different things and figure it out. And, those you know, although they suck, I look back and think sort of fondly about those times because I know that that's where you're really gonna make serious progress when you are able to dig really deep, deeper than you think you can to improve.
Well, and I love the as it's going to be a great conversation because there's a whole bunch of things I want to hit on there. But the first one is the preparedness, right? As you know, we sell software to retail, so we hear all the time people are looking for that magic strategy, the magic ticket, and give me that, and then I'll be a millionaire. And I think a lot of people probably perked up when you said, most of your trading is done kind of automatically, and said, okay, that sounds super easy. I just let a robot make a bunch of money for it. So first thing I want to just reiterate is the discipline in your first trade. I think that's fantastic. I don't know how many times I've seen it completely the opposite. I saw a TikTok and it said you buy when this thing crosses this thing. So then I've come to Trade Ideas, I've built that scan, and boom, I start trading. Where, people don't know if it's going to work or for how long or what percentage winners, what the risk reward is. Are you going to be comfortable with the mathematics of those outcomes? And that's why we built the paper trader, and that's why we built the back tester, is to allow a lot of these things to happen risk free. So I just wanted to reiterate for the audience that I think is one of the major takeaways, is that you have to understand what you're doing and what the outcome is going to be before you place the trade. And again, the same thread with a lot of the traders has been this idea of I need to always kind of reinvent yourself and to move. So that's going to be kind of my next question. As someone who is, I'd say, semi-systematic. So far, I guess we put the interviews on a spectrum. You have Steve and Andy, which are kind of fully discretionary. They've been doing this for like 30 years. They've got some systems and scans and everything they look at, but it's going through these charts, finding a couple that they think look good, and then kind of taking the trades based off that purely technically. And then yourself, you're 99%, I would say, systematic, and I'm kind of halfway in the middle, right? I like to use systems and I like to use numbers and back tests that I can touch, but then at the same time I like to put the human eye and element on that. The thing that I struggle with, and I'm just going to pick your brain here while the whole world's watching, is you mentioned the ability to kind of move on from a system or to tweak a system that's no longer working. Is there any tips that you have for the audience and for myself that when a system looks like it's falling apart, you either pause it or retire it? So, for example, just from my own trading, I had a weekly breakout system that I've been using forever, and I know that in bear markets, it's going to underperform because, when you're in a bear market, you're buying breakouts, it's just not going to do very well. So for me, I'm just looking by eye and saying, I'm going to turn it off right when the market looks ugly and turn it back on when the market looks good. For you, who's a little bit more day trader, you need to rely on this data a little bit more. So when do you go, okay, this isn't just a normal drawdown in the system, but this system's now dead. I need to shelve it and move on. Like, what's your trigger point there?
Yeah, there's no real. I would like to have a programmatic or systematic way to determine that, but there is not. Like if there is some discretion in the way I do things, it is looking at that, like figuring out when to turn something on or off. Couple things you said there that stuck out of me. One is like you turn something on or off based on the overall market.
Hmm.
I do whatever I can to design a system not to have to do that. Like I don't look at the overall market, and like there's no overall market rules that I include in any of my systems. So, and that's because I don't want to have to make that decision. Like I don't want to have the overall market go into some mode where all of a sudden I've got a huge window of no trades, right?
Hmm.
I want to be taking as many trades as I can every day from my systems. Now, um, turning on or off, like here's another little secret of mine. I have never completely given up on a trading system. So even those ones I started trading from the very beginning, I have created a process for myself to be able to improve them to a point where I can keep them live. That's my number one goal. Keep the strategy trading live. Um, as soon as you stop doing that, it kind of goes off your radar. You kind of lose track of it. but there's still some life there. Like a lot, like a lot of, I've worked with a lot of traders. A lot of traders will come to me for advice and coaching, and I'm always shocked at how much edge there is still in some of the strategies that they've, put out to pasture or that they've turned off and long since forgot about. So I've helped many traders sort of spruce up a strategy that they've long since forgotten about and get some edge out of it.
Hmm.
It's not easy, but what I do is for each of my strategies, I'll know, like, I'll kind of have a roadmap for each one of them. So I'll know that, okay, when this one goes into drawdown, I'm not going to be caught flat footed. I know already some additional rules I can apply that would reduce the number of trades in the system uh, to increase the win rate or the profit per trade. So I already have that roadmap in place. So I'm not like I was saying earlier, where I was kind of caught flat-footed in that drawdown from that very first system I started trading years ago. I did not want to be in that position ever again. So I have this process, this roadmap for each strategy where I know, okay, if I feel like it's in a drawdown and I feel like I kind of want to turn it off, all right, let me apply this pre-planned rule that I've thought about, researched well ahead of time, that I know will improve the system. Maybe, reduce the number of trades in it, but I can keep it live, keep it active. I think a lot about like sort of the library of strategies that I trade. And, you know, it's super important to keep track of all those strategies in your library. Keep increasing that library over time, because what happens is they feed off each other. When you have some breakthrough in one, you find something that's predictive for that particular strategy and makes it work well. A lot of times you can go apply that to other strategies in your library. You can improve those. So it's this, but you have to have some pretty good documentation for yourself about, okay, where did I leave off with that strategy? What was I thinking about there? Where was I stuck with this strategy? Um, but if you can be organized and keep track of your research in certain strategies, um, they feed off themselves big time, and that's how you grow as a trader. That's how you grow your trading business. That's how you make more money over time.
Well, and it's funny. I always hate the advice that you hear a lot in trading circles about becoming a master at a single style and a single instrument and a single strategy. So I couldn't agree with you more. I really think if there is a holy grail to trading, even more than the cliches we know of risk management and discipline and all that, I do believe it's multi strategy trading, because what will happen is the more strategies you unlock, when there is one that may be suffering or just in a normal systematic drawdown, you have another one somewhere else that's holding that up, and eventually it ends up working well. I do the same thing myself with multi-security trading, where I'll trade equities and also forex and futures and everything as well, and the same kind of pattern holds through, that when XYZ strategy that I'm doing on this instrument is underperforming, maybe something else is doing something good there. And that helps with things like discipline and all of that, because there's just, there's another trade or something else is going on somewhere else that you can move on from there. So,
Yeah, I mean, just think about two, like one strategy. You've got the equity curve that you can look at and see, and you've got some drawdowns in there.
mhm.
But if you've got a strategy that's moving up and to the right in general, just think about combining that with another strategy, like, and put those two equity curves together. Each time you do that, that equity curve is going to get a little bit smoother. So I'm totally with you. Like, the more strategies you have, the better off you be, and the better off you're going to be, and they'll feed off each other. I mean, that's how you get better, and that's how you get more robust, and that's how you're going to be around longer, because you are eventually going to have to give up on some strategies, or adapt them significantly.
Do you ever yeah, we're getting real nerdy into the weeds here, but again, there'll be a bunch of people that like this. But is it ever a um, project of assigning more or less capital or more or less risk per strategy as opposed to fixing them? Do you ever look at just something and say, hey, when I know you don't use market dependent filters, but when things are more volatile, this strategy works better. So I'm just gonna, apply a little bit more juice to it in this time, or maybe it's suffering, so I'm gonna, pull back a little bit on just the amount of risk you apply to each strategy.
Sure. Yeah. I mean, I've got a whole, all of my strategies are sort of in a different stage. So when I first come up with a strategy, I'll paper trade it for a little bit. Once I go through the whole research phase of figuring out, okay, I think this is going to work.
Hmm.
Paper trade it for a time, then trade it with very small amounts of money. Compare that to the back test every day,
Yeah.
and see where the differences are. See if I'm missing anything, and scale that up slowly over time. And so you think about that process. When I've traded a whole bunch of different strategies, there are various points in that life cycle. And when I start trading something with a lot of size and it tails off a bit, or I feel like I want to turn it off or need to improve it, I will scale it back down. So I really, um, I just know that when you stop trading a strategy, you kind of forget about it, or I know I do at
Yeah.
least. And I want that, I want those results coming in, even if it's small. I want those results coming in because that keeps me engaged and that keeps me watching it and that keeps me um, in the mode, in the mindset where I can improve it and um, figure out one piece that I'm missing and get it back to where I can put it on the life cycle again and scale it back up over time.
Yeah, and part of the reason I love this conversation is that I think a lot of people they think systematic trading and no work, right? But as we're talking, you can see that Dave would do as much work, if not more, than someone who may be a discretionary who, scans for his gaps in the morning and has just a couple setups that he's looking for to trade. It's just a different type of work where, maybe there's less staring at charts and, trying to hit the button at the right times. But the work is still there, and it's just more, record keeping and idea generation and upkeep and this type of thing. And I think that's very, very important because it's one of the reasons that I was really excited to have you on because when I say things like, systematic trading or auto trading or quantitative in nature, again, a lot of people just go, oh, so there's a box somewhere and I put my money into it and I come back a little bit later and there's more money in it. But it's not that. It is this iterative process of, I'm going to have this idea, I'm going to start trading that, and then things are going good. But if you just stopped at that point and went to the beach and didn't do anything and didn't improve on it or create new ideas, then eventually that strategy degrades and you're kind of left exactly where you were. So I love that. It's just different kind of work. So now that we know there's different kind of work and there's different kind of traders, what are the personality types, I guess, you think that should go more discretionary or go more systematic? Because I'm one that I just truly believe it's up to the how the person's kind of brain works, what side they should be on. But do you think there's somebody who would benefit from 100% systematic versus 100% discretionary, or do you think it should always be some spectrum of the two of them?
Yeah, it's a good question. Here's, as you were talking a second ago, it made me think of an important point about the work and when you do it. Um, think about here's how I think about the trading day. Like if you're making decisions during the trading day about your strategy, that's stressful. Like
Yeah.
you need to have already done all the work by the time the market opens, and you should be following a script at that point.
Hmm.
And I hear a lot of traders come to me and they say, "Yeah, I just trade with a lot of emotion. How can I get the emotion out of it?" And my answer always is, you know, how do you know your strategy actually has edge?
Yeah.
And a lot of that emotion that people have is they're in the middle of a trading day. they've taken a trade, they didn't have a plan before they got in the trade, and now they're trying to decide what to do. Yeah, I mean that is stressful, right?
Mhm.
Because you don't really know. It's like it's like going, going and taking a test and you didn't study. Like, well, yeah, you're not going to do well.
Yeah.
In fact, humans are set up to do, the least profitable thing in that situation, I believe. So I think about it as actually a lot less stressful because I've already, I've set the script up for myself. I'm not making any discretionary decisions. I'm using the back test for each of these strategies as a reference for how I know, what's going to, what is the strategy? What should the strategy look like in the long run? What should my account look like in the long run? And I have this reference that I can check every day to see if I'm on track or not on track and what I need to do to adjust. So I would say if you have, um, if you have the mindset where that appeals to you, if you like Microsoft Excel,
Yeah.
some people like it, some people don't. If you like Excel, you're going to like this type of trading, I think.
It's funny, again, I love to hear this is, I think, what I love about the Market Wizard series, which is a great group of books if people haven't watched it. And essentially, it's a gentleman, Jack Schwager, and he's interviewing all of these top traders throughout time and throughout process, and they're all way different. And there's always kind of some through threads that you can draw. And that was what you just said was kind of the exact same thing, Andy, that I talked to earlier in this week said the exact same thing where he's like and he's a swing trader and a purely discretionary swing trader. He said, I when the market closes, I'm going through and I'm running my scans and I know what I'm looking for and I know what I'm doing. And then I set all my orders and I just wait for the trade to come to me. I wait for that alert to go off and then I'll place the trade. But it was funny, it was the exact same thing of I don't want to have to make decisions during the day, right? So I have done all this research. I've written the notes of, I want to buy XYZ stock if it does this, and then I want to get out if it does that. So even from the discretionary side of things to the systematic side of things, that kind of idea of, an old mentor of mine that taught me a lot about trading always used to say, you don't get smarter when the bullets start flying, which basically means, in the military, they don't go, okay, we're going to put you on the battlefield and then you're going to figure out what to do. It's we have trained and we know the
Yeah.
direction, we know what's going on, and now your job is just to do everything that we said faithfully. And the other thing I wanted to go through and talk about, which I think you mentioned that I really like, is that the the back test as your guide. A lot of people, I think the struggle comes from you're dealing with a probabilistic thing when it comes to trading. You can come in, and I say I could come in, I could smash my forehead on the keyboard, and I could make 20 grand today. Doesn't mean it's a good thing to do. It's just that that's the kind of luck that happened from it. And I think a lot of the problem with trading is people come in and they do something that they think is absolutely right. And then at the end of the day, they lose money, and that becomes frustrating. So, when you talk about it, I just want you to go a little bit more in detail about using that back test as your guide. Essentially, what you're saying is that you can always run a back test and said, I should have either made money or lost money today. And then you can compare it to whether or not you made money or lost money today. So you're judging your performance on how close you were to that back test as opposed to whether or not you were profitable. Does that make sense?
Yeah, that's exactly what I'm doing. And, there's slippage on the way in, on the way
Yeah.
out, and that can, um, I'm keeping track of all that. So that's, it just makes sense to me to have this guide that you're using. And here's something that happened the other day. So, you mentioned that people, the ups and downs of people that make a lot of money or lose a lot of money in a certain day.
Hmm.
I don't even think about money at the end of the day. I know that's surprising for some people.
Hmm.
In fact, the other day I actually lost money, but I was I probably have never been more optimistic about my trading than at the end of that trading day. And that's because, one of my systems that's, in a mature state and I'm trading with a lot bigger size, that strategy had a couple losing trades, like totally normal, but those were bigger and overwhelmed some other strategies that I trade. One of them that I was just getting off the ground, so I'm trading at really small size, and that system did really well. So I got some good confirmation there that this is going to work. Like this new system with some new edge is going to work. But if you looked at my P&L at the end of the day, negative. But
But you
that's
know that when you size
completely
up that new
irrelevant.
system, that would end up being, that makes sense. Yeah.
So I was totally optimistic about the end of that trading day. And that's the kind of, the money, it's weird, but the money kind of has to be secondary to do well.
Yeah.
And this is, my process for trading is, allows me to do that in a systematic way and, not get down in the dumps when you have a losing day. I mean, you will have those days, but, if you've done the research, you've done the back testing, you trade this way, that you're going to make money in the long run. I mean, there's just the math tells you that.
Yeah, and again, so for the people who, and the people that I think would always benefit being more systematic is those people who they don't, it allows, I think, a certain level of faith, that you can implant by saying, okay, if I had done this over this period of time, this is the equity curve. And then you can look at that equity curve and say, hey, look, here's a month where I would have been down 5%. And right now I'm down 5%. And, the equity curve says I should be down 5%. So everything's fine. Whereas uh the one of the biggest problems I see with new traders is just chasing the dragon, right? They're going from system to system to system to system, and they could have come on an amazing system and started trading that, and then for that 1 week period it lost money, and that's just the way it goes. But then they abandon it and they're on to the next system, and then maybe that's when that first one would kind of kick in. Whereas if they had done enough research and studied and said, oh, this is a totally normal drawdown. I can see it in the equity curve that, oh, this drawdown happens all of the time. And I just have to stick with it. And eventually, my equity will hit new highs and we're off to the races. So I love that. Now, um, without, yes, we know that trade ideas can do this and we love it and all of that. But without pumping us too much, because if you're here, you probably already love us and we appreciate that for it. But I want to get more kind of granular on how someone who would be interested in systematic trading would start. Now, we know you should get trade ideas. You should, start in them with the back tester and all of the technical stuff that we can go and you can come to us and we can help you, get started clicking the buttons. But I'm talking more ethereal, right? So I've I'm interested in systematic trading. I've listened to this. I said, yes, I think this will definitely help with what I'm doing. I have my trade ideas. I've opened up an alert window and I'm ready to back test it, but I don't know what to put in it. So let's go from idea generation to kind of through the testing process. So for me, I think probably that idea generation is the first hang up for most people. So do you have any tips for people to get through that before they kind of hop into trade ideas and start testing?
Yeah. So, um, first of all, idea generation and like coming up with strategies is a long-term game. Like you have to be working at it every day.
Hmm.
And what I tell people is at the end of like if you don't have a lot of time, have something set up at the end of the trading day where you can go back and see the stocks that moved up the most, the stocks that moved down the most, and the stocks that had the biggest range. And then go back and see, okay, if you had to participate in one of those moves, how would you have done it? Get
Okay. Yeah.
creative. Like what was happening right before those moves? What was happening at the first part of those moves? And like imagine, go through the thought exercise of if you had to be in that trade, how would you have done it? And then go back and back test that idea and see how that would have worked across all the times that that event occurred. I mean, that's the thing that's so powerful about trade ideas is, a lot of people like to trade the big names. They see a move in Apple, they want to participate in Apple.
Yeah.
That's irrelevant to me. Like the only way that is going to make you money is if you look at that move and figure out all the times that happens. And if that move can generalize across the entire market, that's how you make money. It's not like falling in love with your favorite stock and figuring out how to trade that. The real power is figuring out a particular move that you see in the market that would be profitable if you were in at the right time, and figuring out how are you going to get in at the right time and test that across every instance that that event occurred. And that iterative process, I mean, that's literally how you've come up with edge. That's literally how you come up with profitable trading strategies.
And I love that because again, I love to bring because right, you're a systematic day trader, so I love to bring these other styles into it as well. If you read any of William O'Neill's work, right, who was one of the greatest traders and investors of all times, he did the same thing. He would print off all of the greatest movers of like the last decade, and he would go through candle by candle. And this is back, right? Like actually print them off on a piece of paper, and he would
Yeah,
go through and he would say, oh, Home Depot was one of the greatest movers. And you can see here, and this is where he come up with his cup and handle and his flag patterns and all those things that a lot of traders use today. And then the revenue outperforming. That's how he created his entire system, was just let me sit down with all the best winners and let me look at them and see where the best place was to get involved and familiarize myself enough with that so that when I see that occur again, I know what to do. So you're doing the same thing just from a systematic basis. So instead of having to print off, there's what, 6,000 probably tradable instruments every day. And instead of having to go through all those, that's something that we do a lot of at Trade Ideas, where if you can find the particular settings that you can put together and say, this is what this looked like before this move, um, then yeah, just test it. If the test looks good, paper trade it. If paper trade looks good, then build it on, because that I really think that that is the sticking point for most people, is that you give them a powerful tool but they don't know how to get started with the input. So I love that answer.
sure. Yeah, and I don't mean it's not easy. I will tell you that it is not easy. It's going to take
Mhm.
some dedication and some, um, persistence in doing it. But I think Trade Ideas is really good at being a tool for somebody to take the reins and be successful in relying on themselves. I think that's the biggest thing. Like if you go back and like you were just describing William O'Neill, he wasn't successful because he signed up for a trading room and followed along with what somebody else was doing, right?
Yeah.
He took this into, like, he came up with his own process for coming up with a system that works. And that literally is the turning point for traders when they realize that, when they're not looking at somebody else's P&L, they're not looking at what somebody else is trading on Twitter. Nobody else is going to be responsible for your financial success. It's going to come down to you, and when you realize that, that is when the turning point typically occurs for traders.
Yeah, and again, Dave's talking a lot about day trading, but do the same thing with swing trading. Do the same thing with investing. William O'Neill would look at weekly charts and hold for years, and Dave is out by the end of the day, and I'm, a couple days to a couple weeks, but the same process gets involved in the same way where you have that. The other thing that I really like that we haven't mentioned yet about back testing and about this kind of methodology is you talked about at bats earlier. You get a lot of kind of virtual, I guess, at bats when you run a back test and you see, I always use the example of everyone says, oh, you should buy a stock when it comes and hits the 200-day moving average. And you can go into the trade ideas and say, okay, what happens if I bought every time a stock, fell down and hit the 200-day moving average? And you see the equity curve just plummet. And you go, okay, well, I don't need to go down that rabbit hole anymore because it just kind of completely fell apart and I know it's a bad idea. And sometimes eliminating those ideas over and over and over again can do the best thing, because what what I see a lot of, being out there a lot and going to events and talking at events and everything, is there's a lot of people out there who just kind of talk at you and say, I have this trading style that does amazingly. And in the back of my head, I'm like, oh, just test it. Right. Just go through and
Yeah.
you can test the thing. And whether or not you're fully discretionary, and I always like to use Brian Shannon as an example with his anchored VWAPs. The anchored VWAPs aren't magic. It's how he has learned to use them and utilize them and come up with the trades, that's amazing. I like using Andrew Caldwell, who they call Dr. RSI. Only use the RSI, managed money, made a whole bunch of money, and it was all about him learning how to use that system. So we're talking our own book, but I really think Trade Ideas does a good job of doing that. And that's why I really like what Dave said for the idea generation, is because if you sit both of us down in front of a chart before it made a big move, we're probably going to see two different things. So then whatever you see and then you start to go test, that's unique to you and you can start to really hone in on it over time.
Yeah, I mean, back testing for me, like, here's one way I think about it. There's only two ways that I know of to gain confidence in a system to be able to scale it with and trade it with size. And you have to, like, that can't happen overnight, right?
Hmm.
To gain confidence in a system, you either have, there's one or two ways to do it. One is you just gain experience day in, day out trading the system, and you become comfortable with it over time. The other is back testing. That's how you can, it's sort of a shortcut to gaining that experience, like getting a sense of, okay, how is this going to work over a large number of trades? There's really no other way than those two to really scale up a strategy and gain the confidence in it to be able to put a lot of money at risk and make a lot of money in a strategy. There's no real shortcut. So those are the two options. And that's why I'm so, like, we were talking about back testing is a lot of work. To me, it's like a shortcut, right?
Yep.
It's like a cheat code.
Well, and it's we talked about it again. It's the different amount of work that's required, and I think that's the most important thing. Where a lot of people think the work in trading is showing up and sitting down at your desk and hitting buttons, but as we talked about already, is that it's the preparation, it's the back testing, it's the record keeping, it's all of that stuff. That's really at the end of the day, I think, what makes all of the difference. And you'll see it from the traders we talk to at Trade Ideas, the ones that do that, they do well. The ones that come in and they say, "Hey, I saw this guy on Twitter and he's using this indicator. Can you find us that?" Generally not so much, right? So what we hope is that by these chats we can convert people over, because again, you guys are hearing the same thing from all of our traders who weren't prepped in a back room somewhere. They've just all been around enough time that they're coming at the market from completely different angles. But again, a lot of these threads of, the preparation is key, the adapting the trading to how much time I have to commit to my trading style, to my personality. That's key as well. Steve and Andy talk about how they left the day trading world at the same time. It looks like you entered the day trading world. I think is funny as well. So, all right, we've already gone over, and I think I would actually love to have you back because I think we could go on for a long period of time as well. But for now, any closing thoughts to people? I think this is going to be inspiring to some who say, okay, I want to start this systematic journey. We talked about how to kind of get past that idea generation, but any other big tip from Dave about, if you're getting started on this journey, I think you should remember to do X, just so that we send people on the way until the next time you're on and we can continue the conversation.
Yeah, I'd say, as quickly as you can, stop looking over other people's shoulder. Stop looking at other people's P&L.
Mhm.
Take responsibility for your own trades. Take the responsibility for your own financial success in trading. The sooner you can do that, the sooner the success will come. Um, yeah, but I think I'll leave it at that.
I think that's perfect. So again, thank you, Dave. I think that was a great trading discussion. We didn't even get into all the stuff about how you got started at Trade Ideas and all that. We'll have you back on for that because I think that'll be fantastic. We just went real nerdy for a while for 45 minutes, and I think that was fantastic. So I always say this: if you've made it this long in the video, you're 45 minutes in, I think we've earned a like and a retweet, a share, and all those things that annoying YouTubers tell you to do. But it really does help. The algorithms kind of suggest us to more people. If you thought this content was good for you, it's probably good for someone else. So please take care of that for us on the way out, and I'll talk to you guys soon.